I get it. I really do understand. I know why you work so hard, why you go after things that you go after in your career, why you spend the long hours working, being efficient, grinding, hustling. You just want more time. You want to be with your family, your significant other. You want to experience life. You made this great career. You make great money. But now you want to reap the benefits of the money that you make. So you're probably asking yourself, well, how do I do this? I can't just quit my job. I can't just leave. I built a career out of this. I've saved a great ton of money. What do I do with this money so that I could experience and enjoy life with my loved ones, my family? Guys, I'm glad you're here today. Episode 3, we're going to be talking about which one to invest in, real estate market versus the stock market. I'm going to cover the pros and cons of real estate and the stock market. And at the end of this video, I'm going to give you my personal opinion into what I like to invest into. So stick around. Let's get started. Let's get right into it, right? So who's this for? We have to have a foundation to start from. So right off the bat, this is for those folks who are going to be passive investors. What does that mean? That means you have money that you've earned from your career. You've saved it. You've put it in your account, savings account, maybe underneath your mattress, who knows? But you've got money set aside. And now you want to deploy those funds while you still work your 9 to 5, which you, I'm sure, enjoy doing. You want that money that's sitting on the sidelines to become active. So again, guys, this is for passive investors. So you're probably wondering, why do this video, right? Well, I want to show you the pros and cons of investing in real estate or in investing in the stock market. Plain and simple. Nothing more elaborate. You need to know which one you're going to get into, what's going to be the most beneficial for your life and your lifestyle that you're trying and wanting to create. So let's start with real estate. Let's go through the pros of real estate. What are all these different things that are involved that are beneficial for you to invest this hard-earned money that you've earned to put it into the real estate market? Number 1, price appreciation. That's essentially you holding an asset, whether you have taken your money, deployed it with a investment firm who buys real estate, and their mission, their vision of their company is to hold the asset to generate rental income, which I'll touch on in a little bit. But as you hold the property or the asset, the longer you hold it, the greater the value will be over time. So the Realtors Association did a study. They found in their research that over the past decade, home prices have appreciated by 49%. 49%. That is remarkable. So price appreciation just from holding the asset is one way. Another benefit of holding this asset is that over time, as you pay down your mortgage balance, the value or the equity becomes greater. Now down the line, you're going to have more money that you can tap into by doing something such as a refinance. So definitely price appreciation is extremely important and a big pro for real estate. I know I just mentioned this, rental income. Most people, most investors, especially investment firms, they're going to acquire real estate because they want to hold it and produce income from it in the form of a rental income. Pretty much putting a tenant in a home, letting them pay you rent. So now as the investment firms that you've decided to deploy your funds with, what they're going to do is they're going to do a profit sharing with you. I mean, it could be 20%, 30%, 40, 50, 60, 70, 80, 90, who knows, right? It depends on what you decide and discuss and what that deal requires. So now you've deployed your funds in real estate, and now you're making a monthly income off that money that you've put into the market. What you're doing essentially is taking that money that was sitting on the sideline, deploying it into real estate, and now you are generating income off of it. When you're sleeping, guess what? Your money's not sleeping. It's making you money. So rental income, another big pro. This is another big one. Tax benefit. Yes, tax benefits. As a investor, even as a passive investor, you have the ability to have pass-through tax deductions from the firm that you might have invested with. So what that allows you to do is if you have a high tax due at the end of the year, you can write off that tax amount and reduce the amount that you owe to the IRS. It's a great benefit. This is one that most people probably overlook or really don't think about or take it for granted. Everyone needs a roof over their head. Therefore, the demand, the desire, and most importantly, the need for real estate is not going away anytime soon. It has been here for many of decades, and it will continue to be here for many of decades ahead of us. Something that people take for granted or overlook in terms of an analysis. People need a roof. People are always going to need a place to live. That's why that's a big pro for the real estate side. Another very important, interesting part of real estate, a big pro, is that you're going to get more bang for your dollar. I'll give you an example. If you invested $25,000 into a real estate asset as a down payment, that will buy you a house worth up to $125,000 that day you close. By investing $25,000, in return, you've gotten an asset that is worth $125,000. Well, you're probably wondering, well, do I have to make a payment? Yeah, you're gonna have a mortgage payment for the balance of $100,000. This is where the beauty of rental income comes into play. So let's say you have a mortgage of $400 for that property that you've acquired. But you know you can put a renter in there for $1,000. So guess what? You're going to take that $1,000 rental income, pay $400 towards the mortgage, and pocket the $600 into your bank as profits. More bang for your dollar. Conversely, if you put $25,000 into the stock market today, barring nothing changes, you still only own $25,000 worth of stocks. It hasn't gone up, hasn't gone down. Nothing has changed. So a big, big plus for real estate, more bang for your dollar. So we highlighted the pros for the real estate market. Let's take a look at what are some of the pros for the stock market. Because guys, listen, let's be fair. There are pros to both sides. A nice pro for the stock market is that they pay dividends. Now here's the thing. Not every company pays a dividend. So you're gonna have to research what companies pay out dividends. So you're probably wondering, what is a dividend? Essentially, a dividend is profit sharing by the board members or by the company. So for example, let's say you own 30 shares of that specific company and they decide to pay out $2 of dividend per share. So essentially you would be getting a return of $60 in profit sharing. 30 shares, $2 per share, 30 times 2 is 60. So that is a big pro for the stock market. Another great question you're probably wondering about is, how often are dividends paid? Typically, they're paid either quarterly or annually. So you'll be profit sharing with the company, again, on a quarterly or an annual basis. Another pro for the stock market is easy entrance. So keeping in mind that this is for passive investor, right? Meaning you want to retain your day-to-day job. You enjoy it, you love to do it, but you just have money sitting on the sidelines and you want to go ahead and deploy it and earn money off of that. So easy entrance is a big pro for the stock market because you can find a brokerage or a fund that can take your funds and put it in stock market. So they will do all of the research for you. They'll do the due diligence as to what stocks they want to recommend to put the money into or that they're going to put the money into. So again, find a broker. I use Fidelity.com. So I have one account set up with them. There's plenty of others. Do your homework, do your research. You can definitely find out other brokerages that are going to handle your funds for the stock market. Now, when you deal with these types of brokerages, you get to tell them, hey, I want to be in either low risk portfolios, moderate risk portfolios, or high risk portfolios. The higher the risk, the greater the return should be. The lower the risk, the less of a return that you're going to see. It's just natural. It's just part of the process. It's part of the game. Another big pro for the stock market is the rate of return. So if you look at the S&P 500, which is your top 500 companies, the average 10-year, 20, 30-year return is about 10% compared to the real estate market where you're around 8 to 10%. So you're getting a steady return on your money in the stock market. So again, those are your major pros for being in the stock market. We talked about dividends, we talked about easy entrance, and we talked about rate of return. So those are your pros for both the real estate market and the stock market. But now let's take a look at the cons. Listen, there's always another side to the coin, and we have to evaluate that if we're going to make a good decision as to what to get into. So let's start with real estate cons. Entry. Here's the thing. If you want to get into real estate as a passive investor, you're going to have funds. I'd recommend at least having $25,000 to deploy into the real estate market because you want to be able to invest and get a good return on that money. And most firms, companies, investors that you'll work with aren't going to really take less than $25,000 because they know it takes more than $25,000 to do a deal. Can you do a deal with less than $25,000? Absolutely. I'm not telling you it's not possible, but the likelihood is a little bit less versus having a little bit more money to deploy. So entry in real estate, I'd say it's a con just because you need more cash on hand. Knowledge is important, especially if you're going to evaluate the deals yourself. You're going to have to do homework on it. You're going to have to research. Does the deal work? You're going to have to really get this homework done. Here's the tip that I would give you. Find and network with people in the industry that can help you answer those questions. Hey, is this a good deal? Do the numbers work? Get in network with realtors, get in network with mortgage brokers. Use the experts to help you make the decision. But if you are going to look to do it yourself, knowledge is going to be a part that you're going to have to really work on so that you can make a sound decision into the funds that you're going to use and invest with the company. Time is another con that I look at in terms of real estate. Here's why. If you just quickly compare it to the stock market, listen, if you invest in the stock market today, tomorrow morning you can sell all your shares. Whether you make a profit or lose, that's a different story. But you can liquidate that stock certificate very quickly compared to the real estate. For example, if you do short-term residential, that means a fix and flip. You invest the money for a return that's, 8, 10, 12%, let's say. That money is going to be tied up for 6 months on a residential fix and flip generally. I'm using general timelines. It could be less, it could be a little bit more. If you get into multifamily, typically those funds are held up for almost 5 to 7 years, depending on how the deal is structured. That's just the way the operating process works. They need time to get the property potentially rehabbed, then position the property for it to be leased up and hold that property so they can generate income and cash flow from it. So your money is definitely going to be tied up longer in real estate. So again, we mentioned a few cons for real estate: entry, knowledge, and time. Let's jump over to the stock market and let's take a look at some of the cons that are there. This one I'm going to mention is a big one. It's emotional. Here's the thing. You could have a big investment firm, a hedge fund, come out and say, oh, we hate this stock today. And you will see emotionally people sell off and that stock value is going to drop. And the opposite works as well. Big firm could come out and say, we love that stock and we're going to invest it. We're going to double, triple down on that. And your stock could skyrocket. But that is the emotional nature of the stock market. It truly is more built on an emotional characteristic than knowledge behind it, especially for a new investor or a moderate investor. You're going to have more emotions on it on a daily basis. You're probably going to find yourself checking the stock market daily. Hey, should I hold? Should I sell? Even if your data says hold, if you see a big dip, emotionally, you're going to see an instant loss and you're going to want to sell. Now, I know I mentioned dividends as a pro for stocks, but I also look at it as a con. Here's why. Not all companies give out dividends. That's number one. Number two, the paying out of a dividend is at the discretion of the company board. So it's not as if you have a say-so in getting paid a dividend. If you get paid a dividend one quarter, the company could turn around. The board of members could say, hey, we're not paying a dividend out this quarter. Now, your research shows that, hey, they've been paying a dividend, but the board decided not to. So it has this con in the sense that you really have no ability to make any decisions or weigh your opinions in the board members' conversation. Risk. Look, the stock market has great risk. When you deploy the money into a stock market, it's not like it's protected by a tangible asset, such as real estate. When you put your money into the stock market, it goes up or it goes down. And that's why, to me, it's super risky to get your money into the stock market, especially if you're new to the game. Lastly, shareholders get paid last. All of the expenses get paid out first. Again, the board members make all the decisions. If you're going to get any returns on your money, you have to really rely on the board members as good functioning people, because if they're running a jacked up ship, you can bet you're going to lose money. So your money's not protected by something tangible. It's at the mercy of the people that are running the company. So guys, listen, I just went over the pros and cons of the real estate market versus the stock market. As I told you in the beginning of the video, I'm going to tell you where I deploy my money. Hands down, I love real estate. I have all my money tied in real estate. I have some shares in a few companies, but very minimal. It's nothing to glamour about or boast about. I probably have a couple $1,000. That's about it. But I own assets. I fix and flip homes. I love the tax benefits that I get. I love the ability to create a passive income on a monthly basis and generate that income. I'll give you an example, right? I could decide not to work this month and still yet the rental income can cushion me not working this month. I know as a passive investor, you want to keep your day job, which is perfectly fine. Do that if you love it, enjoy it, keep going. But here's the beauty of it. What if one month you decide, hey, I want to just take a month off. I want to take a little family leave and just zone out and spend time with my family. Well, guess what? If you needed that income from your job, but now you have passive income, rental income coming in from your real estate assets, it cushions the blow. It doesn't make that decision of wanting to leave for a month that difficult. You know that you're covered because you have money coming in. Another big reason why I like to invest in the real estate market is who cares if a member of the real estate board leaves? Here's why. My money is protected by a tangible asset, by a document that's a mortgage document and a promissory note. So if the investor stops making me payments or defaults or doesn't do what they say they're going to do, it's a pain, I guess, to a little extent. But I know that I'll get my money back out because number one, I evaluated the deal with good team members, realtors, mortgage brokers. So I know the numbers work. So I can get this property in my possession and then sell it and recoup my money. In the stock market, if the stock market drops, you can't say, hey, this is protected by this. I'm going to sell this and get my money back. Once that stock drops, you've lost that money unless you hang on and hope for that stock to come back up. But outside of that, you've lost that money. So I love the protection that I get in the real estate market. So yeah, there you go, guys. That's why I love deploying my money into real estate. You know, through this journey, I've been able to help a bunch of people. You know, especially I've helped a lot of doctors, lawyers, non-real estate business owners, and C-level executives, right? CEOs, CFOs, COOs. And they love the ability and the protection that they're getting from a tangible real estate asset. Guys, if you want to learn more, I hold a weekly webinar where I go over what does it all entail to invest into real estate. It's free. There's no cost to it. There's no pitch at the end. I'm not selling you anything. There's no course. It's truly and literally educational. And here's the added bonus. You get to come to the meeting and it's BYOB. Bring your favorite glass of wine, maybe your favorite margarita. Just hop on the Zoom call and listen. Ask questions. Guys, if you're not asking questions, you're not learning. If you're not learning, then you're not taking actions. So I'm going to post in the description the Zoom link for you guys to go ahead and register and join. Again, guys, it's free. I know it sounds a little crazy, but it's free. I promise you, we're not pitching anything to you. Just come on in, learn, ask questions, because the questions that you may be pondering are probably the same questions others are pondering. And I know for a fact they are the questions that I've pondered and I still continue to ponder as I go forward into this business. Guys, hit the like button. If you like this video, subscribe so you can get more notifications as we keep dropping these videos for you guys. I hope you're finding great value from what we're presenting to you. If there's any questions, comments, please post them below. We'd be more than happy to work with you and help answer those questions. Take care until next time.